Good morning. Welcome to my YouTube channel. I would really request you to please press subscribe and like so that you can get notifications for all the further videos that I'll be uploading on my channel. Today, what we're really going to talk about is why has the Indian stock market rallied? The fact remains that India is experienced one of the most severe lockdowns. Millions of SMEs have really shut down. And today, as we make this video, on 7th of June 2020, on the verge of opening up, 8th of June, majority of the Indian economy would slowly open up and people would return back to business. Has anything really changed? However, what we've really seen that the stock markets from the lows of the March 23rd and 24th, where the Nifty, the headline index was at about 7,500, has almost rallied till about 10,100 in the first week of June. So what has really changed? And why is the stock market rallying? A lot of people have having this question that have really been we left out of the market. Should I have invested in the market? Will the market keep going up like this? And what do I really do? I may get a pay cut or my business may go down. So should I just invest some part of my money in the stock market so that I can compensate for the downturn in the economy? Well, let's look at the fundamentals and let's analyze what's really happening. The most important thing that one needs to remember is stock market works on liquidity. What moves the stock market is liquidity. Since the COVID crisis has really hit the world, there is unprecedented amount of liquidity that has really come in the stock market. The US Federal Reserves has injected more than $2 trillion as far as the markets are concerned, and assets have rallied across asset classes, whether it is crude, whether it is commodities, whether it is bonds, whether it is the stock market. And that is not only true for the Indian stock market. We've seen phenomenal rallies in the US stock market, the European stock markets, and similarly in the Indian stock market. Hence, there is a big disconnect between what is really happening in the economy and in the stock market. So the stock market really works and moves on liquidity, whereas the economy really moves on fundamentals. Nothing has really changed in terms of fundamentals of the economy from March till now. Rather, because of the severity of the lockdown and the amount of rising cases, what has really happened is the economic conditions have worsened rather than increased. Hence, there has been in the rally in the stock market. But the biggest risk is a lot of retail investors now feel that they have really been left out of this rally that is there, and they should really participate in the rally. So please remember, please do not throw money in the stock market really without understanding the risk. At this juncture, the market looks overbought, and it will be between a range of about 8,000 to 10,000 in Nifty terms. And there could be fluctuations in terms of the individual stocks. If you look at stocks today, with some news or with some hope that one sector is going to open up, say aviation sector is going to open up, the malls are going to open up, we have witnessed and we will continue to see 8, 10, 20, 30% rallies in these stocks. Well, that's the question of hope trade. Within hope and anticipation that since these are going to open up, the stock will rally 10%, 20%. However, the fundamental earnings of the stock don't really move. Nevertheless, it's not to say that the Indian stock market is going to collapse and we are going to see the lows of March 23rd and 24th, but one needs to be extremely circumspect in choosing the kind of stock that is really there, because the main pain in the economy will be seen in Q2 and Q3. That is when the economy opens up. Today, everything is in the state of lockdown, so we really don't know how much is the damage to the economy. So once we comprehend that damage, there could be a correction in the stock market, and that could be a good time to buy as well. But please remember, it's as the saying goes, it is when the retail investor urges really to enter the market, the professional investors want to exit the stock market. A professional investor, this market is a trader's delight. You can go either way. You can go long, you can go short, you can have option trading, and so on and so forth, which a retail investor may not understand and may not really be able to execute. So it's not about being bullish or being bearish. You really need to be nimble-footed in this market. Hence, be extremely careful. Just because you've seen a fantastic rally from the lows of March 23rd and 24th till 10,100, it doesn't mean everything is going to keep going up. You may see a rally of 200 to 300 points as far as the Nifty is concerned, and then you may see a correction. When you see a correction of about 1,000, 1,500 points, it doesn't mean you turn totally bearish. So this is a very dynamic market. Be extremely careful when deploying money. the best thing to really do is allocate certain amount of money at regular intervals on a monthly basis, and please consult a professional advisor in these markets, because hope trades don't really last. This could be a bear market trap, so on and so forth. Or it could just be that because the stocks have not risen over a period of time, you've seen some kind of rally. So be careful of the market. Do not think that because you've not really participated in the rally from 7,500, the crash at 7,500 to 10,000, you've lost everything. It is very nice to make 25-30% as far as the stock market is concerned, but in these challenging and compelling and turbulent times, please remember, from hard earned tax paid money, if a stock tumbles 20, 30, 40%, it's extremely difficult to digest that loss. So retail investors, please be aware, this is going to be a volatile market, could be a range bound market. So beware and only invest in the stock market after that. And please remember, the mantra for wealth creation is asset allocation and diversification. So don't only look at the stock market, please diversify and keep investing at regular periods of time for a better tomorrow. Thank you so much.